Hi traders, welcome to another episode of the FXP weekly analysis. This week we have many pairs in our watch list, but in this video itself, what we'll be doing is mainly to go through with you four main pairs, alright? Why these four pairs is because this setup, from my perspective and my analysis, is that it has a higher chance, a higher probability of winning, right? So the first one that we want to go through is the gold dollar. Alright, from this chart itself, what you can see is clearly is in the downtrend. Alright, so in this setup that I'm going to show you is that what we want to do is to follow the trend. Alright, so it's a trend continuation setup. So what you can see is that price is forming a lower low and a lower high. Alright, and what we are looking for is for price to retrace back up to its previous structure level, and that's where we're going to enter on a short trade, right, to follow the trend down. So what we are looking for, or which level we are interested at, is basically the retracement of the 61.8 level. And what you can see from this is that there is a previous structure level in confluence with the 61.8. Alright, so how we are going to engage this trade is basically if price comes back up to this level, right? If price comes back up to this level, what we're a bit interested is to short at this level with our stops, if you're an aggressive trader, just above the 786 level, and if you're more conservative trader, your stops can go above the 100% level, alright, which is your previous structure level as well. Right. The first target will be where your new low is being formed, and your second target, what we normally do is we use a Fibonacci tool and measure an extension. Alright, so the second target will be at this 127 area. Right, so if my stops is above, and the target will be here. Alright, but personally what I like to do is that I always shift my stops just above the 786. Alright, the main reason for doing this is very simple. Right, I want to keep my risk to reward ratio a very healthy one. Right, so what you can see is that my reward ratio for the first target, let's say if it hits, right, every risk that I put in, I can get back a factor of 2.43, and if my second target is hit, my risk to reward ratio is 3.54. Alright, this simply means that for every trade that I take, alright, I can lose 2 trades and I make 1 trade. With this risk to reward factor, I can actually make back all my losses and even make a small amount of profit. Right, so this is part of money management as well, which is very important to consider what is your risk to reward ratio. Right, so this is one setup that we'll be monitoring next week on the gold chart. Alright, so what we expect is that if price comes back here, we'll be looking for a short, right, and projecting that price will bounce off this area going lower. Right, so the other pair that we would like to share with you is the EURAUD pair. Right, this one itself, it's an advanced pattern. Alright, so what we are seeing is, let me just zoom out. So the overall picture for this currency pair is an uptrend, alright? So what you can see is forming higher high and higher lows. So what we want is we want to identify the specific entry level. And to do that, we have several methodologies that we adopt over here. On this one, what we identified is a potential harmonic pattern. Right. So starting from this leg itself, what we identify is that this is our starting point for the harmonic. Alright, so it's an X point. So if we pull our Fibonacci to the highest point that price has moved, what we see is that this retracement comes back to the 50% and it bounces off. Right, so for the retracement that it made 50%, we have a potential pattern called the bad pattern. Alright, and what we are looking for a completion of the bad pattern is at the 88.6 level. Alright, so this is how the bad pattern will looks like. Right, you have your XA, A to B, B to C point, and your completion at D point. Right, and if you draw a horizontal line and you look left previously, what you can see is we have a nice confluence of previous structure levels as well. Alright, so this gives us extra confidence and alignment that should price really comes back down, right, to this level, we not only have a completion of the harmonic pattern, but what we have is also the previous support and resistance level. Alright, so what we are expecting is that if price does really come back down, we'll be looking for a buy trade, and our stops will simply go below this X, right? And you add a little bit, for the buffer so that you don't get ripped up. Right, and for our targets for trading the harmonic pattern, we like to use Fibonacci to set our targets as well. Alright, so let me just remove this one. Right, so our first target, normally we would like to set it just before the 382 level. Alright, and the second target that we put in is the 618. Right, and your stops is the same, right, just below your X point, right? And what you see is that the risk to reward ratio is also more than 1:1, right? So this gives us the extra confidence that we need not win all our trades, but if we lose 2 trades and we win 1 trade, right, with this risk to reward about 1:97, about 2, basically we can win 1 trade to cover 2 of our losses. Right, and this is only for target 1, and if you look at target 2, the risk to reward ratio is more than 3, right? So this is a very good risk to reward ratio, right? Basically all bad patterns are pretty nice in their risk to reward, right? So having said that, right, if price next week managed to come back to this level around the 1.4420, we'll be looking for a buy trade, right, with our targets and stops over here. Okay, the next one that I would like to share with you is Euro Canadian. Alright, so this pair, if you look at this chart itself, the overall trend is still in the upward direction, right? But this pair is a little bit tricky because Euro isn't fundamentally very strong, similar to Canadian from last week news and fundamental data itself. Alright, so both are pretty weak. Alright, but what I'd like to share with you all is that for us, when we do our trading and making a trading decision, we don't just base on the fundamental, but we also look at the technical aspects of it. Alright, so in this example itself, we do have another harmonic pattern forming, and this gives us a valid entry point. Right, so we identified that this is our starting point, and if we pull our Fibonacci, something similar from the previous example, the Euro-Aussie pair that I shared with you. Right, but what you can see is that this time round, price pulls back or retraces back to the 61.8 level. Right, the last one was 50. Alright, so 50% gave us a bet, but if price retraces to the 61.8, this gives us another pattern. Alright, which is the Gartley pattern. Alright, and Gartley pattern normally completes at the 786. Right, around this region. Alright, how a Gartley pattern looks like is very similar to the bat pattern, right? Just that the Fibonacci ratios are different. Right, and if you look left, what you see is that we have a whole confluence of support and resistance over here as well. Right, so this level indeed, not only the pattern completion, but we have a nice confluence of support and resistance. Right, resistance turn support level. Right, so need not say if price does come back down to this level, that's what we are going to be looking for. Right, we'll be looking for a buy setup. Right, so we'll be buying at this level. Our stops will have to go below the X as well, right, adding a little bit buffer. Right, and basically the targets will be the same. Right, we'll be using Fibonacci tool, and our first target will comes in around the 382. Alright, and our second targets will be around 618 level. Alright, so once again, if you look at the risk to reward ratio, it's still more than 1:1. Right, so what we like to do is that as long as the trade has the risk to reward ratio of at least 1:1, then only we'll take that trade. Right, so if the risk to reward ratio of the setup itself isn't decent or isn't ideal, it's less than 1:1, you normally skip that trade itself. Right, so this pretty simple, something similar to the last example that we shared with you. Alright, so what we're looking for is price to come back down to this level, and we are looking for a buy setup. Right, the last pair that I would like to share with you is the oil trade. On this chart itself, clearly that oil is going lower. Right, it's in a downtrend, and currently this is in the consolidation area after a huge downward movement. Right, so what we identified on this setup is not on the 4-hour chart, but it's on the lower time frame. Alright, so what we're looking at is this is currently in consolidation. Alright, but the overall trend of this itself, the oil, US oil, is still downwards. So what we are looking at, right, our bias is still that this trend is gonna continue. So what I'll be looking for is a short entry. Which level is a decent entry for us to enter a short position. Right, and what we identified over here is also a harmonic pattern. Alright, what we have here is very different, is because we identified a Cypher pattern. Alright, how a Cypher pattern looks like is like this. So you have your XAUUSD and your D point as well, and this D point completes at the 786 level. Right, so this region. And similarly, if you look left, what we identified is that there is some minor confluence of your support and resistance as well. Alright, so yes, if price does make its way back up to this level, alright, around the 552.75 level, what we'll be doing is we'll be looking for a short opportunity. Alright, and of course our stops will go above our X, and the target is the same. Alright, so the first target is our 382, and our second target will be at the 618. Sorry. Alright, so this is what we'll be looking at. Right, stops in here. Alright, so what you look at is the same thing, right? We have a risk to reward of more than 1:1 as well. Alright, so this is the last point that I would like to share with you. Hopefully that this 4 pairs will give you some decent opportunity to monitor in the market. And what I like to share with you is that on Facebook we have created a group as well, a Facebook group. It's called the FXP Trade Room. So you can find the link below this video. So what you can do is feel free to join that group itself. What I'll be doing, because in the next week and months coming, I'll be having more time to share my trades ideas on what I'm looking at in the market. So what I'll be doing is I'll be posting several intraday ideas on it. Alright, intraday basically means that the trade is ideally taken within that day, and you get out of the trade in the next 2 days at most. Alright, either be it being stopped out or your TP got hit. Alright, so feel free to join there. And other than that, I'll see you the following week. Happy pipping.